Tuesday, April 18th, market analysis, Stan Ehrlich. I'm recording a little bit later than usual today at 10:45 California time because I wanted to see, as much as I could wait, what the morning held. We have a market that's barely higher on the day, up 20 cents at the moment on the S&P. You know, I start out with the S&P usually in the stock market indexes, then go to futures, and sometimes go to forex and or different sectors. So the S&P is barely higher on the day by 0.20 at the moment. But the important part is it opened a new high ground this morning, above all of the highs for the last couple of months. And it's done that a few times in the last 4 or 5 days. But so far, we haven't had any low for a few days now, lower than the previous day. And the bottoms keep coming up, like today so far. We're in a resistance area, so at any moment, this market could turn down and have a big reversal and start to go down and close some of the gaps I've been talking about for a week or two now. 397, there's a gap to close on the spider. Below the DIA, the Dow Jones, a little bit, there's some gaps, and the Qs as well. And we'll get to that in a moment. But very fragile territory here. If we turn down enough to make a new low for the day, for today, by a couple of points approximately, all of a sudden we will have a third red bearish engulfing ER sell signal. We already had two. They didn't work very well or at all. And the third one could be the nail in the coffin, so to speak. Again, overbought territory recently, potential opening high blow off type gap opening. Right now, you can't say that's happening because we're a little bit higher on the day, up 30 cents at the moment. So it needs to, if I'm going to be right, drop a chunk below yesterday's low is what I want. Otherwise, and this trend is up. I've never varied from my long-term bullish point of view since basically October 13th, when we caught the low on the market to the day. The October lows said so in advance, actually months in advance, that during October there was going to be an important low. Anyway, at the moment, a little iffy here. Strong close, especially if it makes new highs, could be the sign that it's about to run right up very sharply and quickly and break into new high ground for many, many months, over half a year. That's a possibility. I think we're close to a high for some sort of correction, but it won't happen so far. Okay, let's go to the DIA for a moment. We have an outside trading range day. The DIA at the moment is up 19, so we don't have an outside down day. We actually have an outside up day at the moment. The lows and the highs are all done. The overbought conditions all done. We had earlier a legitimate signal in progress, but at the moment, because it's higher on the day and actually making new highs for the day in the last few minutes, that reversal is not legitimate and it will turn back to white. So we do not at the moment have a bearish engulfing ER red sell signal. The QQQs are slightly higher on the day also. It opened in new high ground for quite a while, a couple of weeks, but 2 weeks ago, it was the highest high since the previous August. It's been trending higher, more easily, more quickly, more readily on the average for a few months than the other indexes. But now things are kind of flattening out and the Qs are showing us reasons that this situation may change a bit. So very critical situation here. If we get everything to turn down on the day again, especially if it can make it below yesterday's lows, we'll have some serious sell signals. You have to add to that we have already come back up to a little higher on the day for an effort to stay here, which would be nice, modestly bullish. But again, we're close to resistance and or overbought, so I'm not looking for a huge move up, but it could pop for a day or two. Enough of the commentary about the indexes. Let's go to futures. Some important things are happening there. The S&P 500 is a futures contract as well as a index, and we're starting out with that, like the other group of stock market indexes, ETFs. So resistance higher on the day at the moment by a little tiny bit, and in an area, and it's yellow, meaning overbought. All the criteria are here for it to fail on this rally and turn down, but it's not doing it so far. Next chart. Wheat coming up a little bit more, caught the bottom of the market with our green bullish engulfing on March 24th, and now a rally is probably going to make new highs above 720, let's say, and that will be banging into resistance, a red line again. But the more often you hit stone, the more likely it's going to break. So the red resistance area is a good barrier, but they're broken sometimes. Comment, this is a bear market so far, and nothing has changed with that. So the red barrier is likely to stop the rally and turn the market down in wheat. Next chart. Bonds and 10-year notes. Bonds hit support. I mentioned it yesterday as it was coming down into this area. We're getting close to oversold. I said the same thing yesterday and closer even today. At the moment, you have a minor lower low than yesterday and a slightly higher current quote. So we're not having any kind of great reversal. We're just trying to bounce off support a little bit so far. The bigger picture, I think interest rate futures are building a major long-term bottom. I've said so for months now. And I think we're going to start closing above 135. And that'll be a major bullish breakout, maybe in the next couple, 3-4 months, relatively soon. I'll try to scream bloody murder the day it turns up. Don't have that many great sell signals or buy signals on bonds on this particular chart. 10-year notes, we caught the top of the market, the high day back on August 2nd. And we have the test of support currently, just like bonds, with probably a minor lower low today by a few ticks and a slightly higher current quote. So again, very mild activity, nothing particularly profound about this, except it's holding a support. And the trend, I think, is in the process of decisively turning up long-term. Next chart. Crude oil hit resistance, stopped, was overbought just a few days ago, and has turned down for a few days, couple days. Today, it turned back up again slightly. Still looking for it to come down a little bit more. And I talked about the gap at 75, 76 area to be closed. I still think that's more likely than not. Next is heating oil. Neutral. We got some great turning points on heating oil. ER red sell signals at major tops. Next, natural gas. Also, the top of the market's a major ER sell signal. And lately we had a buy signal that was good back in February. And now the market is holding above a resistance area, that little blue line, zooming in on it. And that's a little bit more strength than I would have expected a few days ago. We did have a lower low and a higher close and an outside up day, I think almost, or maybe by a tick or two, but it wasn't oversold, so therefore we didn't get a bullish engulfing. This came so close. So not surprised that it's coming up a little more than I expected, but I'm not sure what to say here at the moment, so shut the heck up if you don't know what you're talking about. Next, gold. We picked the bottom of the market in gold, silver, and platinum, all three, and watch this in a moment, not for gold though. We've had a little correction, held around the support area, nothing particularly super special about it, and starting to turn up again today. I think we're going to see new highs very soon. In silver, we picked the bottom of the market also to the exact day also. We've had three bearish engulfings. They didn't work. The last two of them didn't work. The last one is working perfectly yesterday, and today we're bouncing back up again a little bit. I want to see a little bit more time pass and some more lower lows than yesterday's low, and not happening so far today. Very soon, next few days. By the end of the week would be very nice. And then I'll feel a lot more confident about the bearish engulfing that happened on Friday of last week as to be a really good one. I would not say no to being bearish and or going short around these levels, although they're a little lower than where we sold short a day or two ago. Next, we have well, wait a minute. That was silver. And another comment. If we were still long from the low of the move on March 10th, and that depends on how you set your trailing stop, very flexible for long-term investors or for short-term traders. Short-term traders would have taken fantastic advantage of the first couple, 3-4 days of rally, but may have gotten stopped out somewhere earlier in the rally. Long-term traders easily could have used an appropriate kicker number and still be long. If that's true, you're not stopped out until you're not out of the market until you're stopped out. And with a lower trailing stop, STS, smart trailing stop, we call it, you would not be out and you would not be short from 2 days ago. You'd just be getting closer to take a big profit. Okay, next, platinum. We got the bottom of the market, second low and a double bottom. New highs for the whole move up today, looking great, but now it's officially overbought again in the last 3 or 4 days. It's about to hit resistance levels. It's right up against them now, probably about to top out for the moment. I don't know if the longer term trend is going to change or intermediate. Short term, I'm expecting a bit of a dip. Next chart, high grade copper. It got overbought a couple days ago, dipped down slightly. Don't know what else to say, nothing new here. Soybeans, we got a good buy signal so far, doing very well. And today is the new high since that buy signal a few days ago, about a week and a half ago. In fact, it was on specifically March 31st. So I like what I see. We're pushing through resistance. We may see new highs for the whole trend here for the last several months since last July, any day. Next chart. Bean oil. Buy signal didn't work quite so well a couple of weeks ago on March 31st. Good for a day, and that's about it. And maybe a fraction of a day later, but generally speaking, didn't work. But there was profit potential in there. Now it's starting to come up again. I am long-term bearish because of the lower lows and lower highs for several months since November, and looking for reasons to go short. Rallying now closer to resistance, so time to keep an eye on it. Not quite close enough to overbought that I would like a lot more, but we'll see. Next chart is soybean meal. Neutral to friendly. Next, corn. Overbought last couple of days, looking for a downside correction in a resistance area, but in the process now of breaking an established significant bear trend line. We need more strength. We're just barely above the line. We need to get back up toward the high of today and stay there, or even make more progress and make it a couple of days worth of time frame. That'd look really good longer term. Next, live cattle. Overbought periodically. Don't chase this market up. Probably about to have a sharp break to the downside. Next, hogs, almost the opposite statement. I thought maybe we'd get a little bit more rally out of that oversold condition. Not so far. That's not to say it can't happen yet. Neutral to looking for a small bounce, but longer term bearish. Next, OJ, new low yesterday since the extreme overbought levels above 90. And it's still not necessarily recovering from that. I think we're going to see new lows again in the next day or two. Next, cocoa, new high close, bull market, trending higher, getting awful close to overbought, probably a little bit higher, and then a reaction. Next, sugar, way overbought and staying there. Looks like it could develop into a double top. So I wouldn't buy this. It would bother me a lot. I'm looking for a reason to go short. And if this market could turn back down again on a closing basis, we could have a sell signal. Next. And we're back to the E-mini. That's it for today. You have a great day. Thank you very much.